Good morning, guys. Welcome to this Tuesday, April 29th. And yesterday was an interesting start. That Monday started off like the prior Monday, where the whole thing started from top left and it just kept heading lower and lower and lower. I thought it was going to turn into a really awful day, but then the squeeze started midday, right after that 1:30 update, and there was no looking back from there. And they ended up closing towards the high end of the range. So they barely held that 55.50. So I was thinking more range bound, slight bias to the upside kind of dynamic in the overnight. I was hoping it's going to close above the 50s, would it be a little bit more clear cut, but it backed off below it before the actual end of the session. And the overnight has been pretty much hanging around there. It's actually not a bad spot. It's definitely not pulling back in a big way. So uh, optimism that they may be able to bust through this resistance area once and for all, right? That would be pretty spectacular. If we keep going, well, before we keep going though, news this morning. We have at 8:30 we get international trade. We have retail and wholesale inventories. 9 o'clock, Case Shiller and FHFA housing data, and 10 o'clock we get consumer confidence and job openings. So that's what we got, 8:30, 9, and 10. So that's the news we have in front of us today. Remember, tomorrow we get a little bit more GDP and a bunch of other stuff coming out, including the PCE number and the personal income number. That would be could be a big thing at 10 o'clock. And Thursday we get a few more news pieces of news, but then we are on May 1st, right? And then on May 2nd we have employment situation coming out at 8:30. So Friday's going to be a big number. Anyway, so look, so getting back to the ES. We are starting to build value here up in this upper range. I haven't quite busted through the resistance area, but we are building value. And at this point, I'm going to be fairly optimistic that we can take this out and start grinding this up here up into this upper range. So initially starting off to buy, looking to buy weakness, 55, 50s, 40s down to the 30s, and that's about it. They're not more aggressive than that. So if we get a little bit pullback here, testing the session lows, I would be looking to buy that. If they start taking out the session lows, I'm just going to go back range bound pretty quick. So this could very well be like, yeah, we have 2 days and then they just kind of knock it back down again. But it certainly feels, you got the feel of that wall of worry climb, when they, everyone is predicting doom and gloom and the market keeps kind of grinding higher and in spite of all of that. But we just have to see if they can keep grinding this to the upside. The news this morning, I don't think it's going to be such that it can definitely knock it off the socks, but you never know. And we have a bunch of earnings come out this week. 4 of the big techs report earnings this week. I don't know exactly which days it is. If it's, I should know, but I think it's Wednesday and Thursday. But there's definitely a ton of earnings coming out. So as long as those earnings stay good or at least decent, and they give some sort of a guidance which is not that terrible, I think we have a shot at maybe even moving this a little bit higher. So initially looking to buy weakness, 55.50s, 40s down to that 30 level for rotations back up. Below the 30s, I'm going to take off the long bias and go back range bound. Still looking to buy. The last one below the obvious would be down here at the 55.20s. So if that comes out, I would just stay range bound at that point. And if they get down here below the 5500s, we start leaning towards the short side again. So below the 5530s, go back range bound. Below the 5500s, go back to the short side. Look for the short opportunities or stay on the short side. Looking for retracement right back down here. So at that point, I think they're backing off again. So that's how I get started on the ES this morning. On the way up, not going to be super aggressive on the shorts, but this is good resistance. And the 55.60s and 75s, I think, are the better ones. If they start taking out the 75s, I would not be super aggressive after that point or aggressive at all at that point. So the only 2 shorts I see right now is going to be up here against this overnight mode at the 55.60 to 65s, and then the 75 area up here above the session highs right below that 78 high from yesterday. So That's how we get started. Now, volume-wise this morning, micros is down to 150,000. That's very doable. Remember, when it was crazy, there was 1 million contracts traded here in the overnight. The ES full size is at 110 right now. So definitely volatility is kind of coming back into the normal bounce again. So that's the ES to get started. Looking at the Nasdaq and the bonds. Bond market right now is kind of holding around 116. And I would just call that range bound hold in a holding pattern. So we can see like in high volume node 116.08. That used to be an attractor. Right now it's right back being an attractor. Mode has moved down to it. And I would say that we are trading right at a value right now. So we have an upper attractor at 117.26 or 20 was 16 to 26. We have a lower attractor here down in around the 114 range. And so 3 high volume areas, and we're right in the middle of those two right now. So I would say range bound trading around the bonds right now. Looking to sell strength, 116.10s, 15.16s up to the 24s. Looking to buy weakness, 150, 116s, 15.26, 15.20 for rotations back up. Below the 15, 16 here, I would start thinking about the short side of the market. So below the 115, 15, 16, lean short. Above that 16.25, lean towards the long side. Otherwise, trade it as a range bound market. I think it's in a holding pattern right now. So far, craziness calmed down quite a bit on the bonds. On the Nasdaq, we are pretty much up here against this upper area. We have taken out this 3-letter ledge. This whole congestion area on the Nasdaq has been taken out. We did it yesterday. We closed above it. We're holding above it. So I'm in a pretty good spot on the Nasdaq to start grinding back up here towards that 20,000 level. And going up here, we have a few levels in between, and small high volume areas, a couple of low volume areas to get through. I think the bigger attractor here getting up to the 20,000, up to the 20,100s. That's your attractor on the long term. You have one here at the 19,870, not to be discounted. A small one here at the 19,700s at the high volume area right there. So a couple of different attractor points, but I think the key area of resistance, which is below us right now, starts at that 360s down to the 19,100s. And if they can hold above it, I think we are in a really good shape to start trading this higher. And that would be the big techs leading us higher. So this week is pretty critical for if the earnings come out and it's good enough for the market to want to stay in the game, then yeah, then we are good. If not, if there's some misses there, that would not be a good, that would be a potential rundown right back into these lower ranges again. So initially looking to buy weakness again, 490s, 450s, this is 400s, 390 to 400s, 340s, 310s. So these two support areas, if they come out, that's your lower ledge, right? That's this ledge. So this ledge right there, if that edge comes out, that is right at this area. So that whole thing comes out, bets are off. We are heading potentially lower. So initially looking to buy against those support areas. So but we're trading right now, I'd look to buy against the 450s, 390s. Below 390s, I would more go back range bound. Still looking to buy the 340s and 310s. Last level below the obvious 240s. But I would below that 310 to 12 level, I would start thinking short side of the market, and I would look for that 250 as confirmation at that point. To take out the last two sessions, this is Monday and Friday lows. If they take out both these lows, I think we are heading back down into that lower range again. So that's your confirmation level, and that would not be a good sign at all. But you know, volatile markets, anything can happen. So at this point, we're starting off in a pretty good spot. Doesn't mean we're going to end up there, but we'll see. We have plenty of news this week to drive this market, and they could be between earnings and GDP numbers, employment situation. We can certainly find ourselves in grinding higher at a pretty good clip. So And I think it's I heard quite a few people manage money on the financial news, which are potentially expecting a pretty good rally if the big tech earnings comes out at least in a decent way. Anyway, so that's how we get started on the Nasdaq. Looking to buy weakness, not going to be super aggressive on the short side, but I forgot to say. Hang on, just before I move on, maybe sometimes a little bit too quick, but this one here. So I was thinking the on the short side, the only shorts I see in the Nasdaq would be these two areas. The on the Nasdaq, 550s, 590s up to the 630s. So within the current range, if they start taking out this 630 level, I'm not going to be aggressive on the short side at all. So I'm going to buy weakness initially, selling strength at 550, 580 to 90, 630s, all with a little bit of caution. But they're not necessarily bad. They've been banged up here a couple of times. So definitely looks like we're still trying to grind past this, get some momentum to the upside, but that's kind of where we are on the Nasdaq. So looking to buy favorite the short side, favored the long side, look to buy weakness. Not super aggressive on the short side, but if they take out that 630 level, I'm not going to be very aggressive on the short side at all on the Nasdaq. At that point, I think we may be in a spot where they take this higher. All right, now your oil and gold. So gold back to that 33.20 to 30 area. They backed off the high. So yesterday, we started down on the lower end of the range, right? This lower range, and now we ran right up here to the 33.63s, and now we backed off right back into that attractor area. So gold looks like they very much is settling in around that area. So they backed off their highs. You remember that crazy run up here? It looks to me like they're settling in around that 33.40 level. They've been going down here. Pretty good ledge here at the 32.70. That low volume area held. And so far resistance is holding a nice volume edge here at the 33.50s. Another one not as clear at the 33.70s. Both of them comes out, it starts trading above 70s. I would start looking at the long side of the market again in a lot more aggressively. But I think we are pretty much at the range right now. So I would emphasize range bound trading on gold. And so I look to fade edges, 34s, 50s up to the 60s, and then 70s. And there's fair amount of range here. This is like $50 on gold, so that's a lot of range. It sounds small, but no, it's a lot of range. And then on the way down, look to buy against 33.15s, 05s, 32.98s, 32.88s down to the 32.80s for rotations back up again. So I mean, you can see how volatile this is right now, and they certainly could be go with type of trading both to the short side and the long side as they run towards an edge. So if you start taking out the support area, there's plenty of range until they find the next support area. So could be a short in there on the way down. Same thing on the way up. Could be a long trade between 34 up to the 49s. It's a fair amount of range there. But you had to get the good trade location when you try to get in on those trades, so you don't get just flat out shaken out of them. But starting off range bound, there could certainly be directional trades in there, but it just depends on how it moves. And as I said, on gold you have to have really good trade location, otherwise they just run you out of it, run you out of the trade, or get you caught in a shitty trade. So and oil finally slowly grinding back towards the downside. That will keep happening. So it's nothing really is going to change in terms of oil rocketing higher because of policy. Policy is massive amounts of energy production, and these prices are going to come down. Now, there could be little spikes to the upside. There could be long scenarios, a couple of days of a rally, depending on what happens in the world, in the market. Fine. But I mean, in all those little rallies, I would be looking to sell, at least until we find ourselves down in the 40-50 range on oil. So maybe, yeah, well, I heard some predictions about the lower the oil prices really come down in the next year. It takes a while to get the infrastructure going again, but it's I'm thinking that there's plenty of policy reason why this could come down pretty quick. So anyway, we are in the range on oil though. So trade it as a range. Watch this lower edge at the 58.70 to 59s. If that area comes out, just stay on the short side in a big way. Right now, I'm looking to buy against this area down to that support area at the 59s. So looking to buy down to the 59s, looking to sell up to the 64s, 64.50s, and that's pretty much the range we are trading in. So that's oil for you. So initially, the way the overnight looks, I would be looking for them to run down, testing these lower edges right now. So looking to sell strength at up the 61.20s, 61.60s, 80s, up to the 62.20s for rotations back down again. Above 20s, just go back range bound at that point. So if this little overnight momentum keeps going, we can see them run down here and test that 59.50, 59 to 59.50 support area. And so anything can hold on the way down. So I would be looking to buy against the 60.80s, 60.50s, 60s, 59.80s, 59.50s for rotations back out. It's just hard to say which one is going to hold, but they're all been tested before, and there's a reason the edges are there. So we can't just see them on this chart here. But so looking to buy weakness, also looking to sell. So looking to sell strength initially to see if they can take this lower, and looking to buy against support areas on the way down and see which one is going to hold. And if that last level, the 59.50 comes out, yeah, well, then we are heading lower, and then just stay on the short side at that point. All right, so that's oil and gold. Gold, that's a little pop to the downside right now. But so that's oil and gold, so both range bound. I would start off with a slight bias to the downside on oil, see if they can take this any lower. Back to the ES, and okay, backing off a little bit from the highs. So the sales start at 6:30, nothing going on 6:30. I had to see if they could be a global market opening around that area at that time. It feels like a market opens or something like that, run about that time frame. So anyway, we'll leave it there and wrap it there for now. Right now we are still going to buy weakness, but look at it, run it all the way down to the 30s right now at this point down here at the rundown, and now we look coming down to retest that level. So watch for that potential retest failure setup. All right, we'll leave it there. I'm going to wrap it up. Good trading, guys. And we got news coming out this morning, 8:30, 9 o'clock, and 10. So good trading. Watch out for the news, and see you back at 11:30 for the next update. Later, guys.